Will high listing counts mute the seller's advantage this spring? Well, I've got some new data from Windermere that we're going to talk about today in this Eastside update. I'm your host, Tony Meier with Windermere Real Estate. As we do each week, we're going to cover rates for sale and pending, months of inventory and median sales price, see how the market's evolving and what direction we might be seeing it go into. So first up is interest rates. Unfortunately, rates have been persistently high, sitting at 6.36, up from last week and up a good distance from our 52-week low of 6.11. In spite of the Fed's two decreases of overnight rates, it hasn't really turned into long-term rate decreases. In the future, we hope that changes. So active listings, if you've been watching my videos, you'll know that this is really the key change this year in our marketplace. On average, we have been up, this week we're up 72% compared to 2024. We've been up on average of over 80% compared to last year. So we sit at 972 listings this week, down 7%. We expect listings to go down. And so this is what I want to talk to you about when we get into the active listings a little bit deeper. So new data from Windermere is speculating that we're going to be somewhere around 639 listings on the east side when we close out 2025 and enter the new year. That will be a number quite a bit higher than we've had in many years. In addition, there's roughly 500 market-ready homes that have come off the market, sat off for roughly 90 days so they can reset their cumulative days on the market clock into the new year, whether that's January, February, or March, not sure, but those properties that didn't sell this year are likely to come back onto the market, changing the dynamics of the market. And so when we talk about who's in control of the market, it is a supply versus demand equation. This year, the supply side has been out of whack compared to the demand side, causing prices to soften and giving buyers advantages that they haven't had in years past. So our demand this year has been fairly strong, but it's our supply side of the equation that's changed and tilted the market. We're going to see what happens with that. So speaking of demand, we did have an increase in demand this last week, up 18%, up to 87 pendings. We're down 2% compared to 2024. That supply versus demand equation puts us at 2.58 months of inventory in a balanced market. We're up 76% compared to last year at 1.47 months of inventory. Our median price has come down this week. Our rolling 30-day median, to be exact, is down 3% from last week and a 4% decrease from 2024. So if you've got questions about how to best to navigate this market, whether you want to do something in the holidays or in the new year, we're here to help. Please reach out to us. If you've yet to do so, hit the thumbs up icon, share this video with a friend who could use this information, and subscribe for our future updates. Well, that's it for now, and we'll talk with you next week. Take care.